Mauritius done, Cyprus next. The government has completed negotiations with Cyprus over the new double taxation avoidance agreement. The centre is hoping to shut the doors on investors using the country's tax loopholes to avoid paying taxes in India. Arun Anandgiri of TaxsutraSpecial joins us for more on this. Arun, we've seen the renegotiation with Mauritius and now it's Cyprus. So now will the treaties actually look similar?
Similarly, we'll need to see the wordings, but probably both the Mauritius and the Cyprus treaty will look similar, at least on some articles in the DTA. Let's give the background. In November 2013, you had the CBDT penalizing or blacklisting Cyprus under Section 94A of the Income Tax Act, basically for not complying with certain information requests sought by the Indian income tax authorities under the exchange of information provisions. That had big consequences, which meant all Indian taxpayers who made payments to residents of Cyprus, they had to compulsorily deduct TDS at 30%. Now, after 2.5 years, the CBDT and the Cyprus government both have put out a statement that all pending issues have been successfully resolved. A new DTA will now be signed, and very important, this is in line with Mauritius, at least on sale of shares, which means there will now be source-based taxation of capital gains on sale of shares. And lastly, is that as far as grandfathering is concerned, you will have April 2017 date. All investments made prior to April 2017, they will be grandfathered, they will be protected under the new DTA as well. What happens to the Section 94A notification? That is very interesting. CBDT statement says that they will consider rescinding that 94A notification or the penal provision retrospectively. We have a senior advocate and leading tax expert, Mr. Arvind Datar, who's in fact filed an SLP in the Supreme Court challenging this 94A notification. Thanks so much, sir, for joining us. You must be very happy with the statement that's been put out by the Cyprus and the Indian government.
Oh, yes, indeed, very happy, because this should have been, the notification should not have been issued to start with. I mean, you sign a treaty with a country and then you blacklist it and say that since they're not giving information, you make that any payment to that country will be subject to 30% deduction at source. It was simply appalling. So even if I'm repaying a loan, I have to deduct 30%. Whether or not the resident of Cyprus is earning an income, I have to deduct 30%. The absurdity was that income tax is on income. Whether it's a resident or a non-resident, they can be taxed only on income. But here was a very absurd situation where just because you pay some amount to Cyprus, you had to deduct tax at source at 30%. And the department said that then the gentleman from Cyprus has to come here and apply for a refund, which is all very strange. But we challenged it. Now it's pending in the Supreme Court. Now that they have done this, it's like allowing our writ petitions in that sense. And what is more gratifying is that the board has been very fair to say that they'll make a retrospective change. So from day one, virtually, this 30% deduction would not be valid.
So, sir, what is the impact of that retrospective change, sir? What does it mean practically?
What it means is that
what happens to all the cases where TDS has been deducted in the last 2.5 years?
Now, those people have deducted TDS. Now, in those cases, refunds will be automatically granted. In those cases, I don't think they should insist on the foreign party filing a refund claim. They should make a further clarification and said that if you have given, as an Indian person paying the money, you have deducted tax at source and paid it to the government, it should be refunded to you straight away. So, ideally speaking, the refund should come. Technically, what happens when you deduct tax at source, that the foreigner has to file an application, he has to get a PAN number and so on and so forth, PAN number and so on. All that should be eliminated, and the Indian person who paid the TDS should be given the refund straight away. Yes, please.
So last question, will you be withdrawing your SLP from the Supreme Court?
I don't know. I won't withdraw the SLP. First, let us see what exactly.
Thanks so much, sir, for joining us. Thank you.
Yeah. If it's infractions, we'll withdraw it.
Sure. Yeah. Sure. Thank you. Thank you, Mr. Datar, for joining us. Over to you, Surabhi.
All right, Arun. Thanks so much for taking us through the story and, of course, that conversation with Mr. Datar.